All right, we are now at 11:06. We had this thing scheduled to start at 11 a.m. I've started recording, so let's jump into this thing. First off, I'd like to welcome everyone to the LISC Charlotte Lending webinar. Good morning. Glad to see all of you folks in here. LISC Charlotte Local Initiative Support Corporation. We're a national nonprofit. We are headquartered out of New York City, and we have program offices throughout the country, pretty much in every larger city across the country. My name is Harold Lloyd. I serve as program officer on the LISC Charlotte team under the direction of Ralphine Caldwell, our executive director, and Rusty Mills, our deputy director, both of which are on this call. So we are happy to have everyone. Welcome, welcome, welcome to this webinar. So why did we want to get a webinar going? We really kind of wanted to reintroduce LISC to the Charlotte market. Like I said, we are a nonprofit, but we're also a CDFI. CDFI stands for Community Development Finance Institution, which basically means we can lend. We are not a bank. You cannot open a checking or savings account with us. However, we do have a full suite of lending products, all of which we are going to touch on today. And our lending is a little bit different. It is mission focused, more relationship oriented. We are looking to invest in businesses for the betterment, not only that business, but the greater benefit of the overall community. So everyone that you see listed here are our speakers. Like I said, Ralphine, Rusty, myself, representing LISC Charlotte. And then we have Andrea, David, and Karen, which are in our national office. These are subject matter experts, if you will. So I'm very happy to have them on this call, and they're going to be going through really kind of the meat of this presentation that we have for you, and really touching on what does LISC do, what does it look like, how to get a borrower to a yes, what our lending process looks like I said, touching on the products that we do offer, mentioning the technical assistance resources that we do have available, and so on and so forth. So just quick housekeeping rules. Everyone that is an attendee is on mute, so that we have a lot of content that we want to share with you all today. It's going to take a little bit to get through that. So we want to keep everyone on mute. However, we do welcome your questions. No question is a dumb question or bad question, trust me. But put your questions in the chat, please. We will be monitoring the chat throughout the entire webinar. And once we get through all of the content, all of the slides, I will then open it up for Q&A, and we'll read off the questions that folks have been putting into the chat. And then all of our panelists will address each question accordingly. So with that, I will kick it over to our fearless and bold leader, Ralphine Caldwell, the executive director of LISC Charlotte.
Wonderful. Thanks, Harold. And good afternoon to all of our businesses that are on the line. Thank you so much for giving us an hour of your time today to meet LISC Charlotte Lending and my incredible team. I will start, Harold talked about a little bit about LISC, and Harold, you can go to the next slide. A little bit about LISC and who we are. We are, as Harold said, a nonprofit organization. We were established about 40 years ago. And our goal was very simple: to tap hard to reach public and private dollars and place those same dollars in our underserved communities. The premise of Charlotte is no different. We opened the Charlotte office in March of 2019. And when we opened because we are acting as administrator over a housing fund, which you may have heard of, called the Charlotte Housing Opportunity Investment Fund, where we have a $50 million fund that builds affordable housing. However, the other reason we wanted to come to Charlotte is that we wanted to implement our comprehensive community development approach into our neighborhoods in Charlotte, particularly our target neighborhood of historic West End. So what that means is that while we do work in housing, we want to work in other areas to really make, in order to make a neighborhood great and equitable, you can't just work in housing. You have to work in housing and economic development, which includes the great work that we've already done and continue to do with our small businesses, health, safety, sports, and rec. You want to work in all those facets of a neighborhood to really be able to drive the needle of upward mobility for our residents. Next slide. LISC is a CDFI, which stands for Community Development Financial Institution. And what that means is our primary goal through our lending line of business is to inject capital in communities that lack access to financing. That is our primary purpose. And we do that through the loan products that you see listed here, from pre-development, acquisition, to providing working capital for our businesses. All of these will be discussed later today. The team will discuss all of these with you. In addition to that, outside of the program and products, we provide financing to many different projects, from community facilities, mixed use. We're going to outline several of those today for you as well, in addition to the work that we do in affordable housing. Next slide. What is LISC? We're often put into the box of LISC as a philanthropic organization or a foundation. We are not a philanthropic organization or foundation. What we do is that we raise dollars, whether or not it be private or public dollars, and we place those same dollars into our communities. Some people say, why LISC? The reason for LISC is that we have the capacity to be able to we know there are dollars out there for our communities. Our primary purpose is to get those dollars into the right hands, which means we want to get it into the community. And so we do so through our partnerships. We always leverage our dollars. We have invested well over $5 billion in lending since our inception, another almost $2 million in grants that we've provided. And all of that has been because of our expertise that we bring to the table. We work with community organizations, your grassroots organizations, who sometimes are pegged as, oh, they can't handle being able to infuse that much money into them. We take that off the table. And so we offer that technical assistance to be able to partner with residents to be able to get the things that they have already said they wanted in their community. And I will, the last thing I will say is, we understand and we appreciate you giving us the time today, but also, we know that small businesses drive our community and our economy, right? And we appreciate you so much because you have remained steadfast in the last 2 years during what was a crucial time for everyone. Right. And, when we started this process, we opened up and then we had to pivot, because we had a plan and we pivoted at the beginning of the pandemic because we saw that there were already efforts underway when we got into the pandemic. There were efforts underway to support the nonprofits, to support the people. Our goal was, how can we support the small businesses who employs the people? And so that's what we did in March of 2020, where we provided grants to businesses, and we still remain. And now we're at a point of, okay, now how can we assist the businesses even more with flexible capital and being able to infuse that into your business to make your business great? So thank you so much for being with us today. And we want your input and we want you to talk to us, because one of the things is that while we have my team, my incredible team, because I stand before you, but I can't do anything I do without this incredible team on this call, but we also have some of our national representatives as well. So it's good for us to hear from you to understand, what do you need and what do you think might be a hurdle for you as you're looking at possible financing with LISC. So we appreciate you either today or even after this call. Please reach out to us. We definitely want your insight and your input. Thank you so much. And I'm going to turn it right now to my right hand, Deputy Director Rusty Mills. Thank you.
Good afternoon. Good afternoon. Again, thanks for joining us. We truly appreciate it. I say hello to some and welcome to others for joining us today. I'm going to speak a little bit about our local impact. We, again, started here in 2019, opened up the office, and of course, 2020 led us right into the pandemic. We were able to help small businesses during that time with about $4 million in grants. That was national as well as local. We partnered with the city on a local project to get some small business grants out to folks here as well. 96% of those grants we did nationally were to women, minority-owned women businesses, as well as 69% were to just businesses owned by women. We also put out about $447,000 in technical assistance supports. And that is, we also fund organizations that do technical assistance themselves. Those organizations locally include the Women's Business Center, Aspire Community Capital, and also Small Business Community Development Corp out of Durham that has a presence here. So we able to support them, the work that they do, helping you figure out where you are, doing an assessment of where your business truly is, what you need to do to get it where going the direction you want to go, and also, kind of some steps on how to get there. We're the intermediary step before you really go to a bank and get, comments that your package wasn't tight, wasn't together. We're the place to go to help you get the resources and assistance and direction, coaching that you need to help you get yourself best prepared to go in for financing, and also to kind of right size and course correct your business if that's needed. We also have been able to do some lending. As Ralphie mentioned, we're known for housing that brought us here, but we do so much more. On the lending side, we have been able to help two minority developers on the West End get some projects going. You all know about the Sankofa project, as well as a couple projects going on at the Beatties Fort LaSalle intersection, anchored by Chase Bank on one of those. But again, that's just some creative ways we work with the Knight Foundation and the city of Charlotte to help put some monies into those projects, ways that Knight Foundation never done before and the city of Charlotte had never done before. So we're innovative. We're here to create solutions and help figure out how to get to the yes on deals. As Harold mentioned, that makes us a little different from banks. Whereas, banks, may be more confined by federal regulation. We're able to come in and look creatively at how to put sources in the deal, stack funds, stack different types of funds in deals. When I say stack, I mean actually layer financing into deals so that it comes up to add to the total sources needed for the deal. We still require some equity in the game in terms of the developer or business owner. So we'll talk about that later when we get to the products and kind of what our loan requirements are. But again, I'm gonna wrap up there so we can get into the heart of this discussion, but glad to see you all. Hope you all are doing well, and hopefully y'all work with us, we can get you doing better. And I'll turn it over to, the West Side Land Trust. Let me talk about that a little bit. We also did some work with the West Side Community Land Trust, which is a group that does land trust home ownership by owning the land underneath that the houses sit on. We're able to work with them on a $330,000 loan to get them to do their first couple of houses with ADUs on the back. You've heard the term ADUs at the city. That's an accessory dwelling unit. That's what that stands for. It's like the homes will be single family home ownership. The units, the ADUs, will be rentals that are in the rear of each home. So there'll be opportunities for home ownership as well as rental on the same site. So it'll be targeting renters whose average median income are in the 60 to 80% range, as well as 36% for the renters. I'm sorry, 60 to 80% for the homeowners. This is an example of, again, a creative way of financing home ownership. We're big on that. We work with the city again on their down payment assistance programs to help point people to those assets and resources. And it's just another creative way of figuring out how to do holistic, comprehensive community development in a way that brings change to the whole community, not just different aspects of that process. So again, Westside Community Land Trust is here doing a lot of great work. We're happy to call them a partner and have them under our umbrella. And we call you on the call partners as well. If you took the time to join us today, we consider you partners and that you're interested enough to figure out what we do and to hopefully follow up with us directly. And now I'll turn it over to our product subject matter experts to talk about LISC core lending products.
Thank you, Rusty. My name is David. I'm part of the National Small Business Lending team, as was mentioned, and get the pleasure of working hand in hand with Ralphine and Rusty and Harold and the local Charlotte team. Ralphine, thank you for framing everything in that way. Thank you all again for joining today. And we really would love to hear from everyone, whether it be at the end of this or going forward, to hear about specific questions you have to your development projects or small businesses. So looking forward to doing that and engaging with you in that way. So to get into some of the specifics of the products, this slide is really intended to show the wide variety that LISC can try and be a direct lending resource and partner to you all. So sometimes that's in very early stages, like the pre-development loan that you'll see on the very left. That can be for architectural fees and costs or demolition costs, any other early stage costs and expenses that you're incurring. Sometimes LISC is doing just that side of the project, and then a more traditional lender is able to come in at some of these other stages that you see. Sometimes LISC is able to review if we're the right direct partner throughout the gamut that you'll see here too. So the next main one, the acquisition, Rusty started to touch on this, the loan to value that you see there of up to 90%. That can be a very key differentiator for how LISC can be a more flexible alternative resource to you as a developer, a small business owner, if you're looking to acquire property versus a more traditional lender. I like round numbers. To use $1 million property as an example, if the property ends up appraising at $1 million, LISC would potentially be able to structure up to a $900,000 loan in that case, meaning you're bringing in the additional 10%. In more traditional scenarios, sometimes that can be flipped a little bit where you're needing to bring in more cash up front and the lender is only able to provide a reduced amount of debt. That, again, just from a mission perspective, can be a very limiting factor, as you all know and are potentially coming across. So it's areas like that we try to identify and be a little bit more flexible again and be a resource in those ways. That is also true for construction. You'll see the same LTV there. So whether that be construction costs for a new facility or renovation for something already existing, that is an area that LISC can also lend. Bridge financing. So sometimes there's a very specific gap that comes up within the project and a bridge scenario, or the next one that you'll see there, a project-based line of credit can be another resource to help cover those additional gaps or expenses that come up with the project. And then along with that, both mini perm and permanent financing as well. Mini perm more on the 5 to 7 year term that you'll see there for stabilization or financing that might be needed. Permanent a little bit longer term, up to 15 years usually. And again, with the loan to value ratios that you'll see, that's pretty consistent throughout as well. Going down a little bit for project type, these can be areas, Ralphine touched on this as well. LISC is very focused on driving community development, supporting community development throughout all these different sectors. So that can be with the arts, nonprofit organizations, childcare facilities, commercial real estate in all different types of ways, housing, rental, all areas that we want to support. On the very far right, and what we'll get into a little bit more specifically, I know it's for a lot of the people on the call today for small business work. One key note is the $100,000 and above investment amount that you'll see. So the small business lending that LISC does is really focused at that level, $100,000 and above, usually 2 years in operation and above for the small business. So if you're more of a startup or pre-revenue type of business, that's something that connecting with technical assistance providers, maybe more micro lending types of organizations similar to LISC, but working at those more initial levels is something that we can try and help connect to. But our direct investment for small business is usually at those levels. I think, okay, to go to the next slide, maybe to talk a little bit, thank you, about the small business lending work. So you'll see some of the total numbers over to the right there. And some of the different uses again. From a mission standpoint, at the top, focusing on supporting low to moderate income neighborhoods, and Ralphine and everyone mentioned throughout the West End, and just that is something again that we want to be very intentional about from the start, is supporting that work, supporting work of minority-owned businesses, women-owned businesses, LGBTQ+ owned businesses, veteran-owned businesses. That's something that hopefully is a consistent theme that you'll hear throughout all this. For a small business, that can again mean acquisition of commercial real estate. Something that we focus a lot on is what we call rent replacement strategies. So if you're leasing a space and maybe looking to acquire something as a way to build assets and wealth, that is an area that we can focus on. The construction, leasehold improvements is another one. So maybe you are leasing a space for the time being, and the building owner is able to provide some assistance, but you're needing additional funds for build out. We'll get into some examples that I think are specific to that too. And really at that $100,000 to $250,000 range in a lot of cases there, where that can be an area of focus. Furniture, fixtures, and equipment, permanent working capital. The one key note there I would say is just making sure for working capital that it's very specific for the uses of funds versus maybe more of a general revolver. As Harold mentioned, we're not a bank. We don't have those checking accounts, and some of us, we're focused on very specific investments. So for working capital, sometimes that can be contract fulfillment. We have supplier diversity initiatives that from a mission standpoint too, we're really focusing on kind of specific areas like that we can try to be additive and supporting from a working capital standpoint. And then last keynote there, you'll see the contact information again, where please do reach out. I know sometimes it's easier to do so after the fact, so I'd love to talk through specific scenarios. Thank you. Interest rates, keynote here maybe as a takeaway. I won't go through all of these because I talked too much already, but the keynote is that with these different interest rate subsidy sources that you'll see, it's a way that LISC can be very intentional again about supporting different areas. So healthy food financing, supplier diversity initiatives, it's areas that we can try as it goes through the underwriting process or almost more on the back end to subsidize lower rates as much as possible to kind of support these different activities and groups. The only other note I would like to maybe add in here is just outside of these from an interest rate perspective, this can be a point or two higher than a more traditional lender as you continue to grow, thinking maybe more on the small business side of some of this, but as you continue to grow and have access to those traditional lines, those are partners of ours and kind of a pathway and ecosystem that we are certainly encouraging. LISC is an alternative and hopefully a flexible one again. And so trade-off might be with a point or two higher initially from an interest rate perspective, but we do also have these programs that tries to blend down and lower those rates as much as possible. So that's kind of the key overall point with rates. Thank you. Project 10X. So again, just from an intentional standpoint, the Project 10X is a very intentional way that LISC is trying to close the racial health, wealth, and opportunity gaps in communities of color with a focus on Black communities. That is done through our lending work and enduring wealth and equity, opportunities for economic mobility, not just through lending, but also connection with technical assistance, partners locally, work that we're doing through local offices on that end, and with community health, resilience, and safety as well. The key factors here are that if it's a Project 10X loan, that those funds are deployed to a BIPOC-led organization or to programs or assets that are explicitly serving communities and populations of color. Again, just a way that we can be very intentional about our work. A client example, always fun, maybe virtual show of hands. If you've been to SOSU in Charlotte, had the pleasure of working with them last year on a $300,000 tenant improvement loan. It was an example of leasehold improvements, again, where all the different, as you can imagine, costs or maybe experience coming into a space. The building owner was able to cover some of those, but the flooring, the plumbing, HVAC, electrical, all the different costs that are incurred were how we were able to structure our use of funds. SOSU, quick story, Rocky is originally from Charlotte. He opened a restaurant in a different market, but was interested in coming back home and very intentional about that. You see the job creation, that was something that we really learned along with Rocky and worked with him on to understand the job creation, the community aspect, and that is absolutely a loan that we'd like to highlight, and please visit SOSU if you haven't. Thank you. I think you can jump ahead to the next one too, if that works. Perfect. More reiteration here, but to really emphasize project and purpose for us, both small business lending, for working with developers, understanding what you see as the community benefit. Are you creating jobs? How is that like tied into your model? What other ways are you trying to provide a resource to the community? Understanding that and supporting that is a very initial component of our work. The relationships, really existing and new ones. We are working with banking partners. We're working with local CDCs and chambers, and always looking to grow that to, again, be embedded in the community and hopefully working with the types of developers and business owners that are working with those other organizations. And we're all kind of part of, again, that same ecosystem. Last thing to note here, maybe the money in, money out. I think we touched on this already too. It is important, I think, to remember some of these things that we're talking about today, especially they are loans, and Rusty really highlighted all the amazing grant projects, especially throughout the pandemic, and something that LISC continues to try to do in terms of providing direct grant resources. For the lending, we are trying to inject capital in and all the different intentional ways we're talking about. We also want to make sure that we are setting up good structures for you, the business owner, you, the developer, not overextending debt, making sure that the repayment sources, because they are loans and not grants, making sure that all that is structured in a healthy way for you is very important. So focusing on if it's a developer project, what are the sources of repayment that are committed and coming in to then be able to repay the loan. If it's a small business, maybe those are your existing operations and understanding the cash flow of that. But whatever new expansion maybe you're taking on, just working with you on the projections for that to again understand how is that going to support repayment on the loan. Is kind of the key component of our underwriting process, one of the key components. Thank you. More stuff here again for what gets listed. Yes, again, this is a lending scenario. I know these can all sound like great things, but to get to the specifics of making sure we're the right resource and to making sure that we can get to that yes, that really is focused on that repayment for all the reasons mentioned there, that making sure that whether it's the collateral security and understanding that, or just the repayment sources, that is a comfortable structure to you, the business owner, and to LISC the lender to make sure that we can get to yes. But from the start of that, making sure that the purpose of the loan is clear, making sure the use of funds are tied to specific uses. Those are some key core areas that we'll talk a little bit more about in the underwriting slides as well. The last one I think that I'm going to touch on here, the due diligence checklist, which that as a follow-up item to really talk about some of these. If you have questions about any of these sheets, working with you, projections is maybe a good example, especially on the small business side. That's part of my role on the small business development team is working hand in hand with the business owner to work through questions on projections and assumptions. So if there are any ongoing questions, this slide is meant to be kind of exhaustive with that. Another key note is a global cash flow is something that we put together, again, thinking with small businesses. So you'll see individual tax returns, personal financial statements, any other sources of income that you have personally, knowing how tied you are to the small business. That's something that we're also reviewing and working with you on to make sure that our debt structure, even though it's a business loan in that example, is still something that fits into your global kind of cash flow as an individual and business owner. I think that is it for me, so I will pass it on. Thank you again, all, and looking forward to working with you going forward.
Thanks, David. So I'm going to talk really quick. Johnson Farms is a project that's in Rock Hill, South Carolina. LISC actually funded acquisition and pre-development, almost about $1.3 million. This was an affordable housing property. It was vacant land that they were purchasing to then develop tax credits through a combination of bonds and traditional lending. Both this deal and the Westside Community Land Trust were funded outside of the Choi Fund, which I think is hopefully helpful for context that even with the affordable housing and community development lending that LISC is doing does not all relate to the fund that was set up with the city and LISC. So just want to reiterate that LISC plays a lot of different roles in a lot of different developments and funding sources. So just wanted to note that. We can go to the next slide. Next, we're going to go through some of the a deeper dive into some of the kind of key underwriting considerations that LISC looks at. Really kind of the 5 key elements really are repayment, collateral, project feasibility, the capacity of the organization, and then the financial health of the organization. And before everyone runs off, because this is going to be really dry, I want to reiterate something that I think is really kind of the 2 key tenets of LISC lending is that we are patient and we are flexible. And so I think it's just kind of, as we're looking through this, and it seems like these are really high barriers to entry, or this could be kind of a barrier. I think that just recognizing LISC is flexible. We try to be flexible. We kind of try to look at as we work pretty hard to get to a yes. And so just want this, this is what we look at, but want to also just reiterate that we are flexible. We want to talk through things. We want to understand things. It's I think for us to get to a no, sometimes we just kind of really, before we get to a no, we really make sure we can't move forward. So I will next slide is repayment. So again, I think, Ralphie touched on this really well. LISC, as much as we do have grants programs and programs that were in the community. The lending dollars that we have are typically borrowed from other lending institutions. So we have like a requirement to repay those funds to those. So repayment of loan funds are really, really critically important for us. And so what we're looking for when we're underwriting is kind of how will this repay? If it's in a small business, kind of we're looking at the cash flow of the business. If it's a housing or community development project, we're looking at kind of when we're getting paid, if there's a future payoff, if there are subsidies or grants that are repaying us, or in the capital stack, are they committed? Another thing important is kind of like the stage of our financing and where we are, because again, LISC is incredibly flexible. So where, we can go from pre-development all the way to perm financing. So kind of along the line, kind of where are our commitments? Kind of what's the cash flow available? Does the market kind of show that there's a need for the project? For small business, we really want to look at kind of as the business currently operates, can it support the requested debt? And then also if there's, does a business plan support projections or is there market research that kind of validates the need for growth in the business? Next slide. For project feasibility, again, like the first word in LISC is local. And so we really, really want to understand that there is a local community in a surrounding neighborhood that supports the project and business. We want to understand that it is really kind of rooted in meeting the needs of the community. Is there kind of for project feasibility, is it an oversupply issue? Is there a market demand for this? Also just want to understand if it's embedded in kind of a community plan, so an economic development zone, if it's specifically in a neighborhood that LISC is focused on. So I know that the Charlotte office is really highly focused on the West Side community, but there are also kind of other neighborhoods that they're looking at to support. And then is there third-party data that supports the project assumptions? Typically for our commercial loans, LISC requires a 1.15 minimum debt service coverage ratio. And then for small business loans, we're looking at a 1.2 global debt service coverage ratio. Next slide. Collateral. Okay, so collateral is important to LISC because it really acts as a secondary repayment source for LISC. And while collateral is really, really important to us, we also just, again, want to reiterate that LISC is very patient. So while we want the collateral as a secondary source, the initial reaction isn't that, like, just so everyone knows, like LISC is not quick to foreclose, and that's not the situation. So I think we really do, if projects run into issues and loans, like really do, our asset management team is really, really great at kind of working with borrowers and making sure that, our borrowers and LISC are kind of both kind of like equally moving forward in an advantageous manner if projects run into trouble. So, but typically our collateral for commercial loans are the real estate. That would be in the case if someone is in a small business and is looking to purchase their property, there would be real estate. But then if we're looking at a small business loan and it's like a leasehold situation, we would want like the UCC on the business asset, as well as if we're doing an equipment loan, the perfected first priority lien on the equipment that we're funding. We also really look at what kind of the loan to value. And David kind of mentioned that. And I think what's kind of, again, one of the kind of flexible and kind of really needing the need in the market is our loan to value is considerably higher than kind of traditional lending. So that really helps, I think, limit the amount of equity that borrowers are having to bring to the table at closing and cash. So that's really helpful. And then also just kind of from a general credit perspective, if someone is purchasing unimproved land, which would basically be like a parcel of land that does not have utilities on site, we could go up to 80% of our loan amount could be 80% of the value of the land. If it's an improved property, we could do 90% of the value of that property. And then one thing in particular that I think is especially kind of for the kind of more commercial development properties and real estate development is we actually can provide unsecured financing that is capped at $500,000. And we can also, but we typically, what we'll do is we'll actually set some milestones that, you know, up to $250,000 can be dispersed until we receive evidence of our takeout. And then we can go up to $500,000 once there's a committed takeout. This is really typically a lot of pre-development financing for more of the kind of commercial development and affordable housing. So go to the next slide. And I think, Karen, is this you, right?
Yes, it's me. Good morning,
Well,
everybody.
thank you, Karen.
Good morning, everybody. And again, thank you so much for joining us. I'm a small business underwriter for LISC. I've been here about 2 years, and I've been doing this for many, many years within the banking world. So anyway, I really enjoy working for LISC because we do have flexibility. We like banks, we want to make sure you are successful. So if we come to a no, it's probably a no, not now, and we can connect you with partners and people and technical assistance to get you to a yes down the road. But some of the things we look at is what's your history of your organization? How long have you been around? Who have you been founded by? So, you know, we want to know your background as a business owner or, you know, a developer. And what is your track record? Have you been successful, or did you have issues? We all know COVID brought a lot of issues, and I will tell you that we can explain that by looking at possibly your 2019 numbers versus, you know, your 2021, mainly 2020 when everything was shut down. Do you have, does your management team, do you have a strong management team that can help with the projects? Have they done these types of projects? Do we need to help you with external consultants? You know, Ralphine, Harold, and Rusty, they have a lot of contacts in your area. If you need, you know, possibly help with construction or tenant improvement projects, or even accounting help, they have a lot of people that can help support you. Does your board reflect the community? Are they active in the community, well known in the community? Do the board minutes show active involvement or governance? Borrower, for us, borrower must be a corporate entity. We cannot do a, you know, John Smith doing business as whatever. You need to be a borrowing entity. You need to be a business, an LLP, an LLC, partnership, corporation. And then for our small business, we do focus on those businesses with annual revenue greater than 100,000. And we would like you to be in business, have a little seasonality of 24 months. The other thing we do is we do background reports. So we will pull a background check on personal guarantors. So that would be owners of the business of 20% or more, who will be required to personally guarantee our loans, and as well as credit checks. And then we also pull background reports on the business. Many times we find things, and we really appreciate honesty at the first discussion, or when we're starting to explore your lending need. And so if we can talk about those up front, we're all better off, because we will probably find things if they're there. And transparency for all of us is the best thing. We can sometimes get around things. If there are tax liens, you do need to be on a payment plan. We will work, we can work with you through that process. You might not be able to get your loan right now, but once you're on that tax lien and you're on a payment plan, we can help continue to work with you. Next slide. Financial help. Are your financials audited, CPA compiled, or internal? We also look for small business. We mainly focus on your tax returns. So hopefully you have a pretty astute accountant that does your tax returns, and mainly we look at those numbers, as well as internal financials for interim. So here we are, almost September. We would want to look at maybe financials through July of 2022. So we'd like to have your 3 years of tax returns through 21, and then you're internally prepared through July of 2022 or June, whatever you have available. As I discussed, we do look at credit scores. A low credit score, which I love working for LISC, is that we can have discussions about those credit scores and issues, and if they are in the past and they have been, corrected or are in the process of being corrected, we can work with you on that. It's not an automatic no if we see a low credit score. And then we do, for small business, we do global cash flow. So we are going to look at your business income, your business expenses, your personal income, and your personal expenses, which includes, your lease on, an apartment or home, or your mortgage, your auto payments, things like that. So we do look at the debt of all parties involved, as well as the business. And then again, there's our minimum thresholds for credit scores. Again, they can be mitigated if there has been action on working on to repair the issues that are on the credit. Next slide. And then one of my favorite loans, and this is one of the quickest loans I've done since I've been with LISC the last couple of years, but we did a $100,000 loan for Cuzzo's Cuisine to utilize as working capital for inventory, payroll, and expenses while they were expanding to their second location. We also provided technical assistance through business development partner Aspire Community Capital. And again, it was a really fairly quick transaction once we, got to the underwriting approval stage. And I do want to comment on that just a bit. Is we need as much interaction with you, especially when we get towards the closing phase and the underwriting phase, to get information that we need to get moving through the process. And in this case, during closing, the owners were extremely helpful in getting the information we needed to close, and it made the process a lot quicker than it sometimes can be. So with that, I will turn it over to Harold. And thank you, everyone.
All right. So here we are. We have arrived at one of my favorite slides, one that we all have agreed is a very important slide. And this touches on our TA, or technical assistance of resources. So we realized when COVID hit and it was affecting the entire world, businesses were shutting down left and right. And as we have said before, the small business community is crucial to the local economy. So we had funders that wanted to get a lot of these grant dollars out into the small business community. And so one of the main programs we worked with the city of Charlotte on, and getting almost $800,000 out to roughly 79 businesses across Charlotte. But in doing so, we understood and realized that in addition to these grant dollars to help businesses stay afloat, these businesses needed technical assistance. And so we've really kind of tried to hone in on getting some resources out to business owners that are in great need, or commercial developers. So this is really kind of geared towards your startups or folks that have only been in business for maybe a year, 2 years. We've even seen businesses that have been around for 10 plus years, but are trying to grow, and they're just needing some guidance with that. So as Rusty mentioned earlier in the presentation, the first 3 partners that you see there, Aspire, the Women's Business Center of Charlotte, and the Carolina Small Business Development Fund, those are partners that we have worked with to get them funding to help them do what they do, providing technical assistance. And this ranges anywhere from workshops and trainings to different seminars to actual hands-on one-on-one coaching. So we're talking, they help folks with business plan assistance, or if a business is trying to get a certification, they can assist them with that. If the business is looking to apply for a loan and they're trying to prepare their loan package, they can assist with that. So for example, the Carolina Small Business Development Fund, they actually have a business assessment tool. And what they do is they will evaluate how ready your business is for financing, and give you a rough idea of how much they think your business, how much debt essentially your business can handle without it negatively affecting you. So I think that these tools are crucial to really kind of open the business owner's eyes, to let them know where they're at, and then kind of help guide them to get to whatever that next step is. The next two that you see there, Central Piedmont Small Business Center, and then the Small Business and Technology Development Center at UNC Charlotte. Obviously, those are educational institutions. So they obviously have certificate programs, they have tuition-based courses, but in addition to that, they have seminars, they also have trainings, they have counseling and one-on-one coaching that they provide as well. They also have a lot of different just like networking events, which I think can be very important for small business owners to be able to connect with each other. So we definitely always refer folks to all of those resources there. And then the final one, Lowe's Enterprise Strategy Team. This one is a little bit unique. So Lowe's essentially approached us during COVID, and they said, hey, we want to get involved, we want to help, and we want to put our subject matter experts to use. So we want to help businesses on a volunteer basis and dedicate our time to helping a business grow or achieve that next level in growth. So this is actually a 3-month, I guess, term, this partnership where a business is selected. They can help you with growth strategy, with market analysis for your industry. They have financial planning. They have folks that can help you with marketing, with customer acquisition, organizational and design management. So a full range of different aspects in terms of being a small business owner that they help folks with. So that's another resource that we do have available. And we have contacts at all of these different organizations. So for you all that are interested, please feel free to reach out to us, and we can definitely put you in touch with the right person at any of these entities to ensure that you're getting, the guidance and the assistance that you need. So with that, that brings us to the end of the formal part of this presentation, so to speak. So what I'm going to do is I'm going to stop sharing my screen, and I want to open this thing up. Come on, video here. And I want to open this up for our Q&A. So like I said, we wanted to hold everyone's questions to the end so that we can get through all of that content that we wanted to share with you all. But now we're going to address everyone's comments in the chat box. 1 second here.
So I see some questions that I can answer straight away that I think came through. So there was one question here about, does LISC do single family mortgages? We do not provide consumer mortgages. However, we do support home ownership, and that's typically through supporting and making loans to developers or nonprofits that are building single family homes, but we do not provide direct consumer mortgages. But I know Ralphine has a lot of experience linking folks to groups that do down payment assistance and support that. So again, like LISC has lots of resources to connect you to, but that is one product we do not provide.
That's a good question though. All right, let's see. So I see one in here. It says, does LISC lend outside of West End? Yes, absolutely. So West End is our target market. Reason being, when we came into our physical presence here in 2019, a lot of our funders that support our office had a focus on the west side of town. We know that that's an underserved community here in Charlotte. So yes, a majority of our focus is there. However, as a CDFI, we can lend throughout anywhere in the Charlotte MSA. So wherever you are, talk to us. Next question, let's see. What is typical approval time? Oh, that's a good one. Angie, I feel like I want to toss that one to you.
I will talk about from the kind of, I think we have a little bit of a different closing process for small businesses and kind of, I would say, commercial lending, which I think is kind of so for the commercial lending, it takes us, from credit approval to closing, we were tracking about 6 to 8 weeks. And so we can kind of only underwrite as fast as we can get all the information we need. So that's why I like to say from like credit approval to, we're tracking 6 to 8 weeks. And Karen, I don't know kind of what's happening in the small business closing department.
For small business, we actually outsource our closing to another CDC located in San Diego, and they are experts. So that's why we chose to do that. And typically our loans are smaller. So we wanted a small business type, specialty group to handle our closings. Our closings are really dependent on the collateral and the project. For like a working capital loan that is, $100,000 out the door at funding secured by a UCC, we can close that in 2 to 3 weeks after approval. Now, if you have a construction project that involves tenant improvements, those typically can take a while. They can take 30, 60, 90 days, even longer, depending on the information that we have to get from you, the contractor, the insurance agent, et cetera. And sometimes it gets slowed down for various reasons. For a real estate acquisition, again, same kind of thing. We do need all types of insurances. We have to do a deed of trust. So, that typically takes 3 weeks just to get the, to get the deed of trust and the escrow open. So it kind of varies based on product. And again, if we have a good partnership with you to gather the information that we need quickly, or if you have people on your team that can help you with that, it will go faster.
Absolutely. And to add on to that, when we are having the initial kind of discovery calls or conversations with the potential borrower, one of the first questions we always ask is, what's their timeline? Is this time sensitive? Just to get an idea, so that way we can be very transparent up front, and let you know if it's going to be tight, or kind of give you a rough idea of what we can do. But like you said, we're very flexible, and so we always try to work to your benefit. So the next question I see, what is lending cutoff for small business and commercial?
I do this because we
Okay.
we have a fun song and dance about this on our side, but typically we look at the loan amount is typically $500,000 or less for small business, like for a specific, like a small business. But so when it goes above $500,000 and it's we'll typically look at that as a commercial loan. But I think there is there's a little bit of a nuance and kind of but that's typically how we look at it. Mind you, we can make on the commercial loan side, we can make $100,000 loan to a nonprofit that's not a small business. So that's where I say, but that's typically our general guideline, is that $500,000 is kind of that loan size, where we still categorize it as a small business loan. And then anything kind of above that goes kind of more into like our commercial ECDEV lending. Correct, Karen? I'm not misspeaking. But again, yeah, we have lots of conversations about where it's best categorized. And that's also a little bit about kind of some of the real estate, what's happening with the project. So as much as that's our guideline, we do kind of look at things on a case-by-case basis to make that as muddy as possible for you.
Thanks, Andrea. So we've already addressed the single family mortgage question. Another one is, does LISC invest in businesses? So I'm assuming.
Got a question about equity investment? I'm assuming if it's, so we really provide debt, would just be the very period.
Simple answer, yeah. Okay. Will this webinar be recorded? Yes, it's being recorded right now, and we will make sure that we get the recording out to not only everyone who's on the call, so you can reference that at any point, but we're going to send it to everyone that was invited, just in case for folks who've missed it. Next question is, if borrowing in business name, will I still have to guarantee?
Yes, you will. Any for small business, any owner that owns 20% or more of the business will have to provide a personal guarantee. I do want to add just a comment on that question, though. We differentiate ourselves a little bit from like a typical SBA loan, because I know if any of you on the call have gone down that path with an SBA loan, a 504 or 7A, I'm not talking PPP or EIDL here, but if you have gone down that road, when they take a personal guarantee, usually for a project that is under collateralized, they will take your personal residence. They'll take a second deed of trust or third deed of trust on your personal residence, where that is something we don't do here at LISC. Now, we're taking a personal guarantee because we do expect the loan to be paid back, but we are not going to take a deed of trust on your home as collateral. We would take the business assets, or the business real estate, et cetera, but we are not going to take a mortgage, a second or third mortgage on your home, as does SBA.
Yes, thanks, Karen. I think that's a very important component to highlight there. The next question is, more about global cash flow and how my personal credit works in that analysis.
Sure. Okay, so global cash flow, again, we would take all your business debt. We would provide you with a business debt schedule that you would need to fill out for your business debt. And obviously we have your tax returns for your business income, and then we will have your personal tax returns for your personal income. And then we will pull your credit score, your credit bureau, which will show all of your personal debts. Your personal credit score, though, is obvious. It's a separate piece of this. We do want to make sure that in the last year or so, you've paid your mortgage. And if you haven't, then we really need to understand why. We probably aren't going to be able to help if there's been a bankruptcy in the last 2 years. I know banks go almost out to 7. We can look at it, if it's been as recent as 4, if it's been discharged. Again, we have to explain that to our credit team. We are credit committee approved here. So none of us on this call are able to approve loans. We have a committee, so we are not the deciding factors, but we are the ones that are behind, going for it with you to try to get our credit committee to approve the loan. So again, your credit analysis, personal credit analysis, is separate from the actual global cash flow.
And I do want to say LISC intentionally has really kind of spent a lot of time kind of grappling with credit scores and some of the stuff that's really like embedded in it that I think is kind of, unduly and unfairly kind of hindered kind of BIPOC individuals, people of color. So just recognizing that, like, LISC really wants to understand kind of the story and the context, and not just like, this is the score, we're moving on. Like, that is, we really want to understand kind of, even if there was stuff in the past, we just want to understand, like, hey, how was this overcome? Okay, it happened, it was 5 years ago. Like, it makes medical debt, like some of these things that just like or student loan stuff, like we just recognize that like some of this is a less indicative of like a representative of like your ability and willingness to repay us. Like, it's some of this stuff, we recognize that some things that show up on credit scores and reports are kind of outside of control of individuals.
Right. And sometimes we find that now medical expenses, many times people don't even know they're on there. I mean, I personally could have them on there and I don't even know it, because insurance will, some of these, maybe ER places or whatnot, put stuff on there and you don't even know it. So we don't really focus on those, to be honest with you. And I know there was a law passed that I believe in 6 months, they are going to not affect an actual credit score as much as they have in the past, which I think is an extremely positive thing. Also, sometimes these cell phone companies will slap on a $79 charge that you didn't know anything about. Again, if you can call them and pay it, that's great. If you're like, or if it was like 10 years ago and it's $79, we'll move on. So again, we just need to discuss them. We are a team, all of us, including our borrowers. So we just want to discuss these with you.
Yeah, thanks. And one thing I also want to mention, Karen, that you highlighted is credit committee. So we have a credit committee that we have to present the deal to, and more or less kind of persuade. We're advocating for the borrower on your behalf to get this deal approved. So loan decisions are not made locally. So Charlotte, Rusty's not saying, yes, you're approved or you're denied, or Ralphine, we have to take it to our credit committee. So just so folks kind of have a better understanding of how it works a little bit internally. So thanks, Karen, for mentioning that. So the next one, and we kind of touched on this, next question is, what are some mitigants for credit score issues or experience in business? Could that be something to mitigate, a lower credit score? Karen, I don't know if you really kind of touched on that a little bit.
I think I kind of was looking at the chat, and I think that we've kind of touched on that.
Yep. And if anyone has any further questions, obviously all of our contact information is available. Myself and Rusty are your main points of contact. So reach out to us on an individual basis and we can talk more in depth about, your personal business or situation. But next question is, can LISC refinance my existing business loans?
This one is an interesting question. Normally, this is not really something that we focus on. We are not really a debt refinance company because we do have mission-based. And mission is to grow, hire new employees, make the community better, that sort of thing. So refinancing existing business loans is not really a focus of LISC. So in most cases, probably not.
Thanks, Karen. Good question, though. Next one is, does your lines of credit revolve? And does it allow me to borrow and repay on an as-need basis?
Okay, I'll take that one again. This comes up a lot. In fact, as a group, we talked about this before the presentation. We do not do revolving lines of credit. We can do permanent working capital, if you need to purchase, some equipment, or, if you have to purchase some inventory, that sort of thing. But we would allow you to draw for possibly up to 12 months, but then you would need to repay it over a 5-year principal and interest period. The reason why we don't do lines of credit, borrow, repay is, again, we are not a financial institution. So we don't have your checking account that we can put the money in, or, take it out to make the payment. So we don't really have the infrastructure to do lines of credit that revolve and borrow and pay back.
Thanks, Karen. The next question is, does LISC finance use accounts receivable as collateral?
Yes, we can do that, but that kind of goes hand in hand with your question about the line of credit. So mainly we do this for government contracts. We don't normally do, if you have, 50 customers and, they're both business and consumer clients, we normally don't do that kind of financing. Again, that would be more of a traditional bank product to do an operating line of credit. If you have contracts with the government, that is mainly where we see this. So we would have our loan tied to that government contract. Let's say, and many times government contracts, they are slow to pay. And so maybe, you have to have your services out the door and you don't get repaid from your contract for 30, 60, 90 days. We can do usually just monthly draws based on 80% of those government contracts. And then, but again, we normally don't do the borrow, repay. We can just advance you those funds. And then at the end of the loan term, then we would start amortizing that loan out.
Thanks, Karen. So that's all the questions I see in the general chat box. There is a Q&A chat box, and there's a few questions in there. So we'll jump to that. The first one is, what source do you use to determine a nonprofit organization's start date?
So recognizing, I think there's a little bit of time from like when it's formed, like when an organization is formed and when they receive the 501(c)(3) status. Like I think we would just use like the formation date of when the organization, from a nonprofit perspective, just knowing that sometimes there's kind of that lag of nonprofit approval.
Perfect. Thanks, Andrea. The next question is, who would we speak to directly for development funding? So like I said, myself and Rusty Mills, we're the direct contacts here locally. So you could reach out to either or both of us and we can start getting the conversation going. Our information was posted. I can put in the chat box before we drop, so everyone has, our direct line and emails. Next question is there a loan limit based on the business or organization's current operating budget?
So I think we kind of, feel like there's kind of like multiple levers that we size loans on, and it's kind of like LTV is one, and then also like our debt coverage. And so we always want to maintain that kind of a minimum of 1.15 based on the project operations, but then from the business, it's the global cash flow would be like personal and business. So I feel like those are kind of like the two levers that are always kind of like working in concert, is the loan to value and the kind of actual debt coverage ratio and cash flow of the project.
Absolutely. Yep. The next one, it's not a question. Hey, Angley. Hi, she says, Angley from Cuzzo's Cuisine. She's one of the owners. We wanted to say thank you to Liz, Miss Ralphine, and team for providing us with a $100,000 loan and for always being there whenever we call. Well, shout out to you guys. Thanks for being on the call. Your food is great. We love you, and we're going to continue to support you guys. Next one, question, Kenny Robson. Hey, Kenny, what is your team's success rate when presenting to the credit decision team? That's a good question.
So I will say that part of like our credit process is actually a pre-screen at intake. And that actually gives everyone who's on credit committee and all of the kind of like national lending team a chance to look at what is going to be coming to them. And kind of there's a early stage go, no go. And so that has also kind of helped us streamline making sure that when something gets to credit committee, we've identified the risks and the mitigants. And so that we don't want to drag out deals to a point that we've like strung out along borrowers for months and months and months to get to credit committee to get to a no. So we have some barriers in place that wouldn't be the first no, I think, is kind of just to let you, but it can happen, but that we try to catch it before it gets that far, I'll just say.
Yeah, I'll just add on, as Andrew said, there's a lot of screening, a lot of back and forth that we do prior to credit committees. By the time we get to credit committee, it's been vetted, and we have questions that come in from the credit committee, as we're getting ready to present. So if there's some stoppers, some clear deal stoppers, they are captured before we get to credit committee. And pretty much after credit committee, I don't think they see a whole lot. I would think it's better than 75-80% in terms of what you don't get done. It may be some subject twos that allow you to close, but in terms of getting an approval, I think we have a pretty good track record on that, Kenny.
And I think that's a really good point, Rusty, is kind of just like that there are things that get credit approved that don't close. And some of that is just because like conditions don't like align in which a way that like it makes sense for us to fund anymore, or so that's just some of that's it. We're, I think, also working really hard to make sure that we're setting up closing conditions and expectations ahead of credit committee, so we aren't credit approving things that can't get to closing. So we're working really hard to make sure that we can move things as quickly and kind of as seamlessly through our lending process. But I do just kind of, I think it's really important for our borrowers to be kind of prepared and responsive for questions that come, and just kind of, and really being kind of honest and willing to kind of share the information. And it's as much as, and part of that is, I think, like Karen and Harold and Rusty have all said this, like we all want to get to a place where we can get to a yes. Like we're all working on getting this. LISC is really, really, enthusiastic and invested in kind of supporting the local communities that we serve. So, again, we really work really hard. We also have, some special resources on a national level and local levels that can help us mitigate some of the credit risk. We try to identify those deals that are that are correctly aligned, and that really, I think, is super helpful. We try to be as helpful to our borrowers as we can while we're trying to mitigate our own risk. So we have a lot of tools in our toolbox, if you will, tool bag, tool belt. So we try to use those as often as we can.
Absolutely. That handles all the questions. Looks like a panelist. Looks like Rusty put a question in the chat, says, does LISC do SBA? Rusty, do you want to answer your question?
We actually have an affiliate that does SBA lending. So yes, we do to some degree. We know there are a lot of SBA players here in town who are designated SBA licensees, and they have that opportunity to kind of be a little bit more quicker with it. But we do have that capability. So when we're looking at your request, we're able to think about it with kind of an SBA mindset of how and what is the best fit for you. If you need long-term, low-rate money and you qualify for SBA, by all means, we'll be able to kind of peep that out as we look at your information and kind of what you're trying to do. We typically look at 5 to 7 year on term. If you're looking at 10 to 15 year term, then yeah, you might want to try to look at SBA type of lending. However, if you're not ready for SBA, then it might be an opportunity for you to kind of go ahead and get the property acquired and do like a, I guess, kind of mini perm scenario where you do 5 years with us until you get ready for something that's more longer term. that allows you to get that government financing through SBA.
Thank you. All right. That is everything that we have. Those are all the questions and comments that I'm seeing in our chat boxes, the general and the Q&A chat. It looks like we have about 15 minutes left. This was scheduled to go to 12:30, ending a little short. Can give folks back 15 minutes of their time. I want to give a special thanks not only to my colleagues, Rusty Mills and my leader, Ralphine, but also to Karen, David, and Andrea. We couldn't have done this without you. You guys literally are subject matter experts. I know personally when I'm talking to folks in the market, borrowers, and there's a lot of questions that fly my way, and I'm like, let me get back to you. These are the folks that I'm going to, everyone. So big thank you for your time and just shedding light on a lot of these questions and things that we wanted to cover today. Again, like I said, the recording, this meeting was recorded. So for anyone who wants to kind of go back and we're trying to scramble notes and we're like, I forgot what they said about this. This is recorded, so you will have this. And any of your fellow business owners or developers who weren't able to make it but knew about it, tell them to go back and check the recording. It is going to go out to everyone. So you have that information. Myself and Rusty, our door is open. I put our direct line and our emails in the general chat box, so you have that. Again, no question's a dumb question. Feel free to email us, to call us, reach out. We're always happy to talk, kind of just talk it through. Maybe you're not at a point of applying for a loan, but you just need a little bit of direction, or you have a thought, you want to kind of talk it through. Rusty and I do kind of like those brainstorming calls with borrowers all the time. We're happy to help, and we just want to support you in any way we can and see you grow and do the great things that small businesses bring to the local economy. So with that, I will close. I don't know if any panelists has any final comments. I think we're good. Again, thank you all for joining, and hope you enjoy the rest of your day. One there. Thanks, everyone.
Thanks all.